Hi everybody, and happy new week. Okay, it's a Monday, 19th day of May 2025, and I just want to give you a rundown, a quick. Let's just do a quick review of what happened, a quick recap of what happened last week before we look at what we are projecting to see the market do this week. Okay, so let's head straight to the chart. Okay, so last week, remember, I told you guys that following the CPI, okay, we saw the market form this movement, okay, this bullish movement. Okay, this is the 1 hour time frame on Euro USD, and look at what the price did. Remember, we marked our volume imbalance right here. Okay, so this was our significant point of interest. All right, so price actually on Monday moved, gave us the signature, the sweep on liquidity during the late New York session, and we saw a significant distribution. Okay, price broke this high right here. Okay, filled in this liquidity void we have here into the volume imbalance, right? So at this point I knew it was going to reject, okay, because this can be considered this vacuum here. Okay, if you go to the higher time frame, you discover that this is a volume imbalance, but this is the 1 hour time frame, so you discover that here it created a vacuum, right, block right here. Uh, so it's a very key point of interest, institutional point of interest. And moreover, another confluence is the fact that this looks like you could see it formed a M pattern right here. If you consider this a low, you could see a break of structure right here. So this is a breaker block formation pattern. Price broke this low, retested back into the point, came back again into that zone, and also is at premium level. And remember what I said, we sell at premium levels and then we look to buy at discount levels. So for me, this is confluence enough to know that price is going to resist right at this point and begin to sell. All right, remember we take our trades on Tuesday, and this all of this happened on Monday into Tuesday. All right, so at this point price was already has already slided into Wednesday. Okay, that's in between the New York session and also the London session and the New York session. That was when we saw this resistance. We saw this resistance at this point, okay, at the point of interest. Okay, so but why I didn't take that trade, because remember I told you guys I take my trade during the late New York session on Tuesdays, and if I don't see it play out, maybe due to the fundamentals impact, then we look to also take on Wednesday. Wednesday can also be a very good objective. Wednesday during the late New York session as well. All right, so but um, in this case we have our entry right here, but it was on a Wednesday but wrong timing. Okay, it was just immediately after the London session. Okay, supposing we had this rejection immediately after the New York session, I would have considered taking this trade, okay, to slide through, okay, to slide into an internal range liquidity, okay, because this was already a very very high objective, okay, for me to slide through the sell for the week. Okay, so most times that's what we do. It's either you see a sweep on liquidity during the late New York session on Tuesday, you could take your trade, all right, to the opposite direction, catch 100 to sometimes 150, sometimes 180 pips, depending on the next target drawn liquidity. All right, so Or secondly, you could, if it's on a Wednesday and you're already seeing and price failed to give us our objective that Tuesday, give us our signature entry, we look forward to Wednesday, seeing price get into an internal range liquidity. Okay, then yeah, internal range liquidity, be it on the premium side or the discount side. If it's at the premium side, we look towards sell, look to go short. If it's at the discount direction, then we look to get what, go long. Okay, so that was what we saw last week, but the only problem was that it wasn't in the late New York session. Okay, so I didn't take this trade. I didn't take this trade last week. So that's one of the discipline you must cultivate as a trader. It's not all about the trades you take or how many trades you take, but how quality is the trade you're taking. Okay, you want to that discipline automatically filters some of the wrong decision you may have taken as a trader, which could have cost you, right? So imagine if I had taken this trade, if this had happened, this rejection happened during the late New York session, and I take this trade, of course I'll be risking the normal 20 pips we used to risk, and I will be targeting internal range liquidity. Why? Because already we have another signature playing out right here. What's the signature? We have a W pattern here. This was a previous high, okay, which was violated. Okay, so we have price rated, stops rated right here, sweep on liquidity. Price broke a high here, and this is a one side movement. This was a buy side in inefficiency, sell side imbalance. So we hope to see, we would have been looking to see price sell into to cover this void. Okay, and we could see that in this void we have a fair value gap here, we have a bullish breaker right here. So we know, of course, when you put your Fibonacci retracement tool to measure the distance from this low, of course, to this high, you discover that price is below, this is an it's below the 50% equilibrium, which is what, at discount level. Okay, so and this is a key region because we see a lot of confluences. One, bullish breaker. Secondly, price is looking to cover, close out this one side movement, this inefficiency, and a fair value gap right here, right here. Okay, and price also is at what, OT level 0.62 region. That's a very very key and sensitive region. Okay, so that would have been my what, target right here, this OT level. Okay, I wouldn't be targeting the external liquidity range now. Okay, because we already have a very good model here playing out. We know very well that this will be a very very strong rejection, okay, around this region. So this would have been my what, take profit somewhere around the OTE region. See, we would have gotten about 111 pips for the week, which wouldn't have been a bad idea. Okay, but for the fact that our signatures didn't play out last week, we did not take any trade. All right, so that's what discipline in trading actually means. Okay, all right, so that is that. So I was looking to see if just on my own, to see what price will do on Friday. On Friday, of course, then as far as I'm concerned, Friday, this would have been a scalping model, but then that's not what I'm trading. That's what I'm not here to. That's not what I'm here to show you. Okay. So guys, that was a quick recap of what happened last week. Um, so let's quickly look at what will likely happen this week. Now today is Monday, and then the market opened gaps up, okay, and then we see price pushing upward, okay. Right, remember the rejection here. Price began to buy and then cleared out what this liquidity right here. This was the previous high right here. Okay, so price actually swept the liquidity above this recent high. Okay, so let's see what price is going to do by during the London session tomorrow, and then hopefully we look to see if we can get an entry during the New York session. Okay, so thank you. So we have the opening right here, and then market pushed up and cleared out liquidity right here on the left hand side of the market into this fair value gap right here. We have a sweet key level here. We have double tops here, one top here, another one into this fair value gap. Look at how price went right into that point. Okay, showing some sign of rejection right here. So I hope to see some rejection here. Okay, so let's look at the higher time frame. This is the 1 hour time frame, so let's look at the weekly time frame and see what that rejection is supposed to mean. Okay, remember our trend line is still here. Remember we broke the trend line, came back, price retested, and we see a very strong rejection at this point. Remember I told you guys that I'll be expecting price to push up. Why? Because we have a model here, a very strong one for that matter. Okay, a break, okay, of structure here, this previous high. Okay, price then what? Price then return into what? Internal range liquidity. Okay, internal range liquidity. So price would likely might do two things. See, price swept this high here, then the rejection. Okay, price pushed back, and price is trying now to reach out for the liquidity above this rejection, or move 50% at least into this region. Okay, so two things. Price can do two things, either of the two. Remember I told you guys that we have a very significant point here. If we are marking our overall, if we are marking our uh, key level from this low to this high, this is what this is our weekly equilibrium, right? This is for this low to this high. Okay, so you could see that that volume imbalance was what respected. Price went right back into that point. So for the week, today we could see that price is, let's see where price is at. Considering this low to this high, okay, price is looking to reach 50% of this level. Price is still here. Okay, so at this point is a point of indecision. We can't really tell what price is going to do. Okay, it's possible price is going to go back to target this as a strong liquidity or push up to the upside. But if you ask me, I would say there's a very sweet point right here, this OTE point. Remember we marked it last week and we said there are a lot of institutional confluences here that we need to see price sell massively into this region. Okay, into this region there are so many interesting things right below this point. Okay, but this is a long time objective. Okay, it's a very long time objective. It will take a very long time before price does that. Okay, so let's see how it goes. By the London, during the London session tomorrow, we'll be able to see clearly and be able to ascertain where exactly price is reaching out for. Okay, but at this point, price is at a very indecisive region. Okay, okay, it's possible it's reaching out for that 50% or OT on the premium side for it to get a reason to sell down to clear out this point of liquidity, then retest and begin to push down to target this IOFED. Okay, right here. And you could see we have a volume imbalance here also. We have fair value gap here in a fair value gap, and also this low right here. Okay, that's an IOFED. And also, if you put your range, Fibonacci range from this low to this high, you discover that when price eventually gets to that point, its price will be around the OTE, ultimate trade entry, right, for the weekly time frame. And you know that weekly time frame are very profound. So this it's a very strong point or strong region to see price get into. That's one objective. Now the second objective might be that price may want to get to 50% of this region from this high to this low, then begin to push downward into this one, into this bullish order block. Why? Because this was the last bullish order block that triggered the buy and the break of structure right here. Okay, so we look to see price retest back into that point. Okay, and another thing I see is a fair value gap here, right here. There's a fair value gap here. If you look closely, okay, this could be an implied fair value gap, of course. All right, so that's another confluence so that we look to see. But this bullish order block is really profound. I hope to see price push into that region before we begin to think of going to the upside bullish, right? So remember I told you guys that for today we price is at an indecisive point, so we look to sit back and watch the chart closely as we wait for signatures, okay, for the right entry. So we are looking to see from now to the London session. During the London session tomorrow, by then price must have reached a reasonable point of focus, or reasonable point which we can be able to see clearly where the directions are for this week. Okay, so another thing we want to do is just to look at the fundamentals. Let's look at the fundamentals to see the um, what the odds are for the week. Okay, today is 5th, is 19th, sorry, that's Monday 19th of May. All right, so you could see the chart that we don't really have any significant uh, volatility. All are what low impact news, all are low impact expectations. Okay, except for, oh, that's throughout Monday we don't have anything reasonable. Let's see Tuesday on the Australian dollar. We have a high impact news by 5:30 a.m. Then let's look down and on CAD, that's Canadian dollar. We have CPI on Tuesday by 1:30 p.m. All right, so on Wednesday, okay, so there's no significant news on Tuesday. Okay, that may impact the US dollar, okay, or the euros. Let's see, Wednesday we have CPI by 7 a.m. and so we are expected to see some form of volatility by 7 a.m. or Wednesday on the GBP USD. So if you are trading GBP USD or Euro USD and Euro USD, which are positive correlated pairs, I would suggest that on this day you trade Euro USD. Okay, whenever there's a news, a high impact news, I always advise you stay away from the currency pair which is directly affected. It's directly going to be affected by the news, okay, by the impact of the news, and you could trade the positive correlated. It may give you a better setup, okay, to get in and also exit your trade. Okay, so that's what it's likely going to happen on Wednesday. We're likely going to see some high impact news on GBP. Okay, and by the forecast right here, they are saying the figures available here. The forecast is 3.3 and the previous was 2.6, which means GBP USD is going to experience strength. Okay, so if that's the case, if you are trading GBP USD and GBP is stronger than US dollar, you are expected to sell, okay, GBP USD by this time 7 a.m. So that's how the fundamental works. Okay, all right. So but that is if it also confluences your technical analysis. All right, so uh that is that for the London session. Then let's see, on Wednesday during the New York session, nothing significant. On Thursday, we have a high impact news on the euros by 8:15. Okay, during the London session, and then we have a plethora of news on the euros. Yes. All right, then also on GBP, yeah, high impact news. So let's see how it goes. Thursday is going to be a really highly volatile day, 2:45, and okay, so let's see if Tuesday is going to give us a good reason to enter our trade, and then see how we can bank on that and capitalize for the week, or sideline, just as we did last week. All right, I hope this was helpful, and please like and subscribe this channel, and also share with other fellow traders who are finding it hard to really ascertain the market directions for the week. Okay, all right, so thank you so much for joining, and I remain the Pips Prophet. All right, cheers, and I wish you a peaceful and profitable week.